on what's brewing today, Bengaluru and San Francisco-based cross-border neo-banking startup Zolve has secured a warehouse debt facility of up to $100 million from Community Investment Management, which is a US-based institutional impact investor. Founded in 2021, Zolve offers a full-fledged financial services app, an FIDC-insured US checking account, and a high-limit credit card to new immigrants moving to the United States. The startup says it's going to use these funds to offer credit products to immigrants in the US and look at geographical expansion. Joining me now to talk about this is Raghu Nandan ji, the founder of Zolve. Raghu Nandan, welcome to Startup Spree. Thank you very much for your time here. If you could start by telling us about the venture briefly. You're only 2 years old now. What is the gap that you're solving for and what the response has been like so far?
Yeah, thanks a lot, Ritu, for having me. So the problem that we're trying to solve for is whenever people migrate to a new country, because they don't have any local credit history in the new country, they end up being treated as high credit risk individuals, because of which access to credit is limited, and whatever limited access to credit that they have, those are super expensive. But majority of these folks have a great credit history in their home country. And we as a company believe that credit worthiness of an individual is a reflection of their behavior, and the location has nothing to do with it. The problem exists because financial institutions in one country doesn't talk to the financial institutions in another country, because of which a low-risk individual gets treated as high-risk individual. And that's the problem that we set up to solve for.
Raghu Nandan, this $100 million of warehousing debt that you've raised, this is going to be a revolving line of credit, and you'll be using this to offer more credit to immigrants in partnership with community federal banks, or how are you going to exactly use these funds?
So the $100 million debt is used to scale the business aggressively. The thing about the migrants is majority of the migrants hang out with migrants from the same country in the new country. And because of which we get a whole lot of referrals. Without doing much marketing, we are able to get access to a whole lot of customers. And this debt facility will help us in solving the credit access to credit problem for majority of the migrants, as we do. And currently we are only operational in the US markets, but there's the same problem that migrants from India face in Canada, UK, Australia, New Zealand, Europe, in all those countries as well. So our limitation to get access to capital is the only thing where migrants to other countries are also continue to suffer from the same problem.
So besides the US, these countries that you named, including Canada, Australia, others, are you going to expand operations there? And if yes, how soon? And what is the market size for these credit products that you're offering to immigrants, in terms of what the growth potential for Zolve could be?
Also, this is interesting. So when all the neobanks across the world are built to target probably subprime customers, majority of the Indian migrants to these countries are completely in the super prime category. An average Indian household income in the US is around $135,000. An average US household income in the US is $65,000. So these are the super prime customers having this challenge. So we're building a neobank to cater to these super prime customers. And because they are super prime, they are ready to avail these services. So people come to us for the credit, but there are more products on the platform: the bank account, remittances between India and the US, insurances for these folks within the US, providing access to loans also in these countries for these folks, and also help them in opening up an NRE and NRO account back in India, and manage their investments back in India, and taxation between the two countries. There's a whole suite of services that we intend to build for these folks, right? And the market size is significantly higher. More number of migrants are continuing to migrate to other countries, and the number of migrants are only increasing year after year. And most of these markets have also relaxed their migration laws to facilitate more number of migrants coming to the country. So overall, this is a growing market. The pain point is real, and these people can pay for services also.
Well, Raghu Nandan, if you could briefly tell us, you're a new bank, not really a bank. How does the business model work, and what is the kind of revenue and profits that you've been able to generate in the last couple of years you've been operational in?
So interesting. So what we do is we are a neobank. So we work with a couple of sponsor banks in the US, right? Through whom we provide our customers access to bank accounts, credit card, and other financial services. Our business model is fairly simple. So we acquire customers while they're still in India. All right. So because of which our cost of acquiring customers is in Indian rupees, and all our revenues are in US dollars. All right. So whenever a customer uses a credit card, we make interchange. And whenever the customers revolve on the credit line, we make an APR on top of that. And for the deposit the customers keep, we get a share of the interest that they earn. So all our revenues are in US dollars, but all the costs are in Indian rupees. So the model is unit level profitable from day one itself. And so these are the two products that we're currently live with, but adding more products, remittances, insurance, loans, getting to the same customer base as well. Right. In the last 2 years of our operations, we are currently at $10 million of ARR.
Raghu Nandan, you've facilitated around $600 million of transactions so far on the platform. Could you give us a sense of what the target is for the next year, and to what extent are you hoping to grow this figure, say, in the coming year or so?
Also, currently, so we have close to 5 lakh customers on the platform, but we have not been able to provide access to credit card for all these folks, right? Because of the access to capital, right? So as the credit card portfolio starts maturing, we should be able to raise debt at a much cheaper cost than what we are able to raise it at, and we should be able to cater to a whole lot of customers. So currently, our TPV is close to $600 million plus now. All right, by December 2024, I think we should be at close to around $3 billion of TPV.